Hello, it's me Abdi HusniFX. Welcome to HusniFX Price Action Strategy course. In this video, I'm going to explain about the price action analysis. When it comes to price action analysis in trading, in this video, I'm going to discuss the price action analysis in trading. I hope you will enjoy, but before I continue or before you continue watching this video, please try to watch our previous video before proceeding to this video where we have discussed candlesticks in detail. As a part of this video, I'm going to explain about the following countries in detail which are related to price action analysis in trading. The first two questions, when we are just talking about price action analysis, we need to understand what the price action analysis is, and also we learn in this video, we learn understanding the advance of futures of candlesticks. When I say the advance, I mean the ultimate gap you will ever need to understand the candlesticks and its characteristics. Once you completely watch this video, then you will not need to recognize any candlestick patterns. So number one is, what is price action? The price action analysis is the movement of a price in the chart. So the candlestick format shows a clear price action. I mean, when buyers and sellers are doing in the period, their activity clearly shows in a candlestick. So to learn price action, we have to learn all the basic and advanced features of the candlesticks. So 5 steps to candlestick analysis that you will learn in this video will help you all of those things. And I hope when you complete this video, as I told you before, you will not need to recognize any pattern or any candle patterns again. So let us start step 1. In step 1, we are just talking about the size of the body. And the size of the body, when we are just talking about the size of the body, we have classified it or differentiate into 3 parts or just the steps. So part 1 or number 1 is narrow, and also is average, and also it's wide. And we know that the body has high and it has also have a low. So in body we call narrow, average, and wide. So you can exactly see that how they are different. When it comes the wide, this is the larger, and this is the average, and this is the narrow. So we will learn about step 1, the size of the body. So find the body of your time frame. Number 1, the candle body shows a lot of information, such as a long body is showing a strength, a narrow body shows weakness, and when consecutive bodies become larger and also larger. So it is showing an increase in a momentum. When consecutive bodies become smaller and smaller, it shows slowing momentum. If up or down move with a greater than average body candle, it shows a volatility high. So let us compare how the candlestick or the current candlestick which you have running on the current price with respect to the previous candle. And also how you should compare will be in number 2, current candlestick with respect to the same swing. And also number 3, the current candlestick with respect to the previous swing. So in step 2, you will learn the length of the swings. I mean, when I say the length of the wicks, larger wicks show that the price has moved a lot during the duration of the candle. but it got rejected, shows that the presence of the supply or demand. At the mutual support and resistance levels, candle wick becomes a larger. It indicates volatility. This generally happens after a long trend basis before a reversal happens from support and resistance level. One more thing is that the longer the shadow, the more likely price will move in the opposite direction of that shadow. So long wick candlesticks or maybe candles do not always signal a reversal if the wick of rejection candle engulfed by a subsequent move it fails, and also it called a reversal rejection or reversible rejection. If it appears between the trend, it shows the trend continuously as a small pullback in a smaller time frame, while a single long wick indicates a possible prices moving in the opposite direction of the wick. A cluster of multiple wicks indicate that prices are likely to move in the same direction of the wick created, and if the body closes in the direction of the trend. So now let me show you this chart. What is happening? We can see that something that what I have told you is just happening in this year. You can see here up move in these candles. When you see that 1, 2, 3 candles engulfed in this high, you can see what happening. Up move with a failure. You can see with a failure that there is up move. So these 3 white horses, what are they? This just indicates is that there is up move. So now you can see that there are other candles which you see a low failure down move, which shows that there is a correction zone here. But you can see this candle which is in here, and if you go on the lower sides of this chart, you can see that there is a rejection candle from where the swing starts with a failure, and then there is where the failure had started to go up, and you can see that the market is just going from this level till that high. So in this chart I have a daily match of resistance zone where you can see a larger up and down wick shows that volatility near resistance, that this is long wick. This long wick, so you can really realize that there is a volatile here on resistance. So you can also see this chart where we have the long wick, this long wick. So the price is on the downtrend from there to here, and you can see that we have a long rejection. This long rejection we call reverse rejection. We also have here that the trend is up, this market is uptrend, but we have long rejections. As you can see here, we have long wicks. So the price correction to the previous swing, as you can see that the price is just a correction or correcting to the previous swing low support. So this was the previous swing low, and you can see that making lower wicks here again with the value. You can see that the value is just going up and getting rejected from support, and the market again goes up. In this chart you can see that here sellers and buyers are active here, but let us look what is happening. This is many candles giving us long wicks, so we call lower wick, and this lower wicks, this is a multiple lower wick, but the close is always lower. The close is always lower. Similar to this is absorbing, or buyers are decreases, or what we call aggressive sellers. So here you can see that the market is still going down. So in step 3 we are just learning the ratio between wicks and bodies, understanding the relationship between the open and close when compared to the high and the low of the recency bar. In number one, we have to always keep eyes and also bear in mind open price tells us where the balance between buyers and the sellers at the opening of that period. In number two, we have to keep mind close price tells us where the balance point was at the end of the period. So in here, let us look at what is happening, body to wick relations and what happens. You can see in this candle the open, close and also the low. You can see the open price where you can see here and the drive low where you can see the from that till here, because the open price has driven the price to this low and also close the price near or at higher price retracement. You can see where the price has closed it. So we call this is a retracement to more than 20% of the move. That means sellers try but fails. Buyers entry sentiment, which is equal to bullish or what we call rejection from the buyers. So in this candle you can see how the price open and close the price between the candle or the middle of the candle closes, and you can see the low. What happens is price open and drive down and close. You see the price open and drive down till the low and also close at the middle of the candle where you can see it. This is price retracement is a 50%, which is below 70% of a move. So that means buyers entry but sellers still in strength, and this is what we call neutral. This is the sentiment of the candle. So let us look at this candle where the price has opened and driving down but closed. You can see but the price is closed somewhere near the low. So this is the price is opening and driving down and close at the low of the candle. So price only retraces but below 30%. It means that this move is retraced by a weak sellers, which is immediately exited for the sellers. So for the price. So it means this is a strong bearish. Still sellers are in lead. So let us look at this candle. You can see the price opens here and also drive up and getting rejected by sellers, and then what happened is it has fallen down or driving down and also getting rejected from buyers and also again drive up, and then the price open and then also price close at or near open price. This is the sentiment which is equal that the market is still indecision. So whether there is no buy or sell, this is called indecision candle. So guys, in step 4 we will learn the value contains. The value contains. In step 4 we have to go on wake of basic law in order to understand what the value contains is. The law of supply and demand is one of the most important when we are learning the way of basic laws. So when demand, what is the law of supply and the demand? When demand is greater than supply, then the price will rise to meet this demand, and conversely, when supply is greater than demand, then the price will fall. And also let us learn the law of cause and also effect. The effect will be indirectly proportional to the cause, or of other words, a small amount of value action will only result in a small amount of price action. If the cause is larger than the effect, will be larger and vice versa. The law of effort FC the result, similar to a Newton's steady law. For example, every action must have an equal and opposite rejection. This is what he said. In other words, the price action on the chart must reflect the value action below. Every value seen as the resulting price were validated and nominally comes to consider. So let us look at the Y is paired candle. We see the average. We see the average, and we also see this average. We call this is above average, and we call this is below average. As you can see that this is there is no high. So the candles look is the same, but when it comes in price action, what happens is that a strong bullish market sentiment comes. The price action has risen sharply higher and also closer up or near the higher of an up candle. So when we talk about the value action, the associated value should therefore reflect this strong sentiment with a strong value, as we can see in the above example is that I have shown you. If the value is above the average, so it means the effort FC the result under, then this is what we should expect to see as it validates the price. The smart money strategy, which is new, is joining the move higher, and everything is as it should be. If the value is below average or lower, this is a warning signal. The price is being marketed higher, but with a little effort. The move is not genuine. If we are in a position, we look to exit. If we are not in a position, we stay out and wait for the next signal to see when and where the smart money or the market is now taking it to this. So now let us talk about the narrow spread candles. The narrow spread candle is a small candle which you can see here, but this narrow spread candles shows as the price action. This means price action, the market sentiment is weak. So you see above the average and below average, as you will see on the next explanation. So volume action in a narrow spread candle should have low value against effort FC the result. The narrow spread candle with the high value if the price had represented by how can the spread be narrow. There are only two possible explanations for a narrow spread up candle on a very high value. Either the professional money is selling into the buying, see the end of the rising market. There is a trading range to the left, and the provisional money is prepared to absorb the selling from traders locked into this all trading range. So in step 5, we will look at relative or a candle price action. On a candle price action, we always focus on the direction of the candle. The relationship of each bar, whether it's high or low relative to the previous bar. Let us look at this up bar. On the up bar, if a recent bar close above a previous bars, we call it higher, making higher high and also higher low. So this is when we get an immediate uptrend. So when we get a down bar, if the recent bar close below a previous bar's low, making lower low and also lower high, we will get immediately a downtrend. When we see the inside bar, this is when the recent bars open and close within a previous bar, making lower high and lower low, and we will immediately get what we call immediate trend curve. The outside bar is when the recent bar previous bars lower and gets rejected from lower and close above the previous bar's high. This is making lower low and higher high. This is when we get that the market is getting a trend volatility or volatile. So guys, an up bar and also the down bar, inside bar and outside bar are here. If you wanted to read more, please watch the video over and again. So let us continue. An up bar starts at the upswing and confirms the end of the downswing. Number 2, a down bar starts at the downswing and confirms at the end of the upswing. In 3, the inside bar does not break the previous higher low, hence they do not affect the direction of the current swing. And number 4, outside bar breaks both the previous high and low, or we can say it introduces uncertainty in the market structure. Outside bar in the upswing continue the upswing, and also the outside bar in the downswing counting the downswing. Typically an outside bar not end or start a price swing without a down bar or a break below the swing low, and upswing will come. Guys, the direction of the trend with respect to the candle position. Here is, we have to read the candlestick in order to know the direction of the candle when we wanted to position. So in this condition, you can see that when you see these 4 candles flowing each other, this means a very strong trend, strong for buying pressure and no selling pressure. This is a clear trend. When you see this condition, it's a clear trend. So the clear trend is trending is up with a deep retracement. Sellers are present at this time. When you see after 5 candles, or when the market is distribution like this way. In this condition, when you see like this one, the upside with a cool price action, very weak buying, and sellers are showing strength, buyers is struggling to upside. And in this condition, you can see that the trend is held good strength up bar and lack of sell bar in a downtrend. Market open and move up and down with any direction convection with this condition. So you will stay where the market is not just too good, but always this will break up and continue up. So in this condition, market open and move between very tight range. Generally these types of price action occur before the breakout. So the breakout can be up or down. So that is what you need to understand and respect is as a candle position. So the context or the background, the candlestick should not be analyzed in a vacuum. It means the candlestick always must be analyzed in the context of what has happened in the past, because I think that most of you use the candle to predict the future. So this does not mean what the candle context is all about. So context is what the current candle shows with respect to the previous candle. So we always see what has happened and what the price has done before. So the current candle still larger or smaller than previous ones, which shows momentum increases or decreases. In the size changing meaningfully or not, buying or selling pressure is volatility increases or decreases. Is the change happening during an active trending period or not? For example, a candlestick in a mid period generally dead or inactive. So we know most of the things that the candles do, and then we know what had happened before. That will help us for our mind to detect psychological prediction that where the price will go. So we need to understand even when we see like this action, momentum increases. This means on upside or upside. This is on upside. So the momentum increases on upside. Then you can see that the market is going up. And momentum decreases on upside. Sometimes you can see that there is rejection. Buyers in strength, no selling pressure. You can see on this condition. Sellers entry price rejection from higher price, and sellers pressure increases on this condition. And then you can see what's happening in the market is distribution up. You can see on this condition that volatility normal, and it goes up. So what happens when you see that sellers enter price rejection from higher price, selling pressure increases? This is what happens. Volatility increases as a big offset candle reverses down and closes below the green candle, where you can see this is the green candle and the price is closing below the green candle. So this condition is one of the things that you may understand how the market has done something totally different what's happening. So testing the price levels is one of the things you may learn in this video, and the concept of testing refers to the market moving towards a price level to test if the price level will accept reject the market's advances. The low and high of each price bar are the natural support and resistance levels, and the wick generally acts as supply and demand zone. The testing of these levels or zones shows the currents of the market and is critical for reading price action. So now we can see what's happening here on these two candles. What are they showing? That the price is gap down and the right below low of previous candle, and but the rejection from the buyers, and also close above the open sentiment, because you can closely look where the price is opening and when the price is closing, when the price also is opening and closing. So that is what makes the sentiment of bullish. So in this condition, what we see, the price open and drive up and close above the previous candle, where you can see here driving up, and you can see where the candle is closing open. You can see where the price open and driving up and close above the previous candle high. This is a sentiment equal to strong bullish. So the price gap above close and test previous bar. You can see that here what's happening, and then where it tested and also rejected higher. It has rejected higher and also close below open, but within the body of the previous bar. You can see within the body of the previous bar. So what do we call this sentiment? We call neutral. On here you can exactly see what happened here. Price gap above and close and test the previous high and rejected. You can see this is a clear example which you don't need to explain all of the time. You can see here what's happening when it's closed below open but within the body of the previous bar. What seems like this condition, you can exactly see that it is neutral, and you can see it's neutral. So on the bullish it's clear sometimes, but they sometimes be opposite, like what's happening here. Like what's happening here. Like what's happening this and this, you can see there is a big difference. So the gap, you can see the gap, and this is also a gap, but they are opposite. This is opposite. This is bullish, but this is not a neutral, it's a bullish. So the price gap down and drive below low of the previous candle, but the rejection from buyers and close above the open sentiment, which is bullish. So now what's happening here? The price tested previous bar higher but rejected higher price and close below the low of previous candle. This sentiment is a bullish. Now let us talk about the three price bars which we always use for expectations. With a clear read of two price action, direction, context, and also testing, we are able to form an expectation of the market in the 30 candle. We would expect the market to move in a certain way in the third bar with our read of 2-bar price action. The confirmation or a failure of our expectation of the third part reveals more about the market and adds to our price action analysis. To form expectations, we need to make a very simple assumption about how the market should behave and should not behave. Essentially, the market has a momentum and inertia. I mean, the bearishness should follow bearishness and bullishness should follow the bullishness. When it does not obey this assumption, we have to cautious may be a possible change in the market direction. In this condition, the price open, you can see, and drive up and close above the previous candle with a sentiment which is strong bullish. That this means this price should continue strongly to the upward. And in these 3 white horses, you can see bullish expectation confirmed by the next bullish candle. You can see it has already been confirmed. What happens here is that the bullish expectation failed as a next candle. You can see what happens. The next candle tested the high of the previous candle and closed below open. This is the open, and you can see it is closing the where you can see below open. Some more examples are what you can see on here. This is a strong bullish. This is a strong bullish. You can see this is a strong bullish because you can see the break. But when the price is at the resistance, always this condition shows you that the market will go down, and you have the bullish. So you don't need from now on to know whether the market will go up or down. This condition is the down and this condition is the up. I hope you have understood more things. And here in this video, I've explained the price action analysis trading in detail. In the next video, I'm going to explain about the technical analysis in detail. I hope you enjoy this price action analyze articles. To get more tutorials, join in my Telegram and also to learn more depths about markets. Thank you and bye bye.